Hi, Jen. I'm excited to jump into the world of bonds today. Your 25 plus years of fixed income, otherwise known as bond experience, is really critical in today's financial environment. There are lots of questions about bonds and how to best implement them in an investment strategy, especially since interest rates have changed so dramatically. Shall we get started?
I would love to. As you know, fixed income is near and dear to my heart.
Okie doke. So let's start with the current interest rate environment. Federal Reserve Chair Jerome Powell continues to make headlines with each interest rate hike. How is the current interest rate environment affecting bond markets?
Well, as interest rates go up, our bond values go down, and vice versa. So when rates decrease, bond values go up. And in today's environment, the rate increases have occurred so quickly, and the size of the increases are so much higher than normal at 0.75% at each clip versus a more typical rising interest rate environment is more like 0.25%. So this is really having an adverse effect on our fixed income portfolios. Every time they increase interest rates, the value of our existing bonds goes down. Historically, our bond portfolios have exhibited minimal movement or volatility in their values. In other words, they act as a stabilizer to our equity exposure when the markets are volatile.
Okay, so are you thinking differently about fixed income strategies and portfolios?
Well, first, let's talk about why we have bonds in a portfolio. Bonds can have three purposes. The first purpose is as a portfolio stabilizer. As I just mentioned, most of the time they are less volatile than stocks and can act as a stabilizer in terms of our market movement when the stock market is really volatile. The second reason is they act as an income stream. So bonds have a coupon that pays interest, and that might be monthly or semi-annually or perhaps annually. And then the third reason is as a total return opportunity. The value of a bond, including the increase or decrease of that value, plus the income stream that the bond generates, is a total return opportunity. Now, during the last decade, interest rates have been so low that bonds weren't providing much in the way of an income stream, nor were the total returns very compelling. However, with rates on the rise, both of these opportunities have become much more pronounced.
Okay, so that makes sense. In today's rising interest rate environment, what's the best way to approach a fixed income strategy?
Well, that really depends on the client and their needs. For growth-oriented clients, or those usually further away from retirement or needing to tap into their assets, a total return strategy with a variety of funds may make sense, as fund managers are actively taking advantage of opportunities in the bond markets. This allows the client to experience price appreciation and/or income depending on the bond market performance. For those closer to retirement, when their income needs are greater, locking in higher coupons by building a bond ladder can be an attractive strategy. When interest rates are higher, bond ladders are also attractive for those who are sitting on a lot of cash who want to preserve their principal but are looking to earn a good market interest rate.
Okay, so we know that there's always a risk return component to investing. So what's the downside risk to a bond ladder?
Well, if you're holding these bonds to maturity, which is usually the intent when setting up a bond ladder, then you could potentially miss out on rising coupon rates. However, depending on the maturity of your bonds, you can end up rolling one of your maturing bond ladder bonds that are maturing into a higher coupon. But what you do miss is when you hold the bond to maturity, you're missing out on the potential total return if the value of the bond increases.
Okay, so holding the bonds to maturity is a way to protect your principal.
Yes, I would consider a bond ladder strategy to be a more conservative fixed income approach.
This is very helpful. Thank you for sharing your expertise with us. If any of our viewers would like to ask more questions of Jen about fixed income or anything else, please feel free to call her or reach out to her at jennifer@mosaicbuy.com. Thank you.
Thanks, Leslie.